Welcome back. If this year has taught us anything, it's that planning for the future is tricky, especially in a volatile business like ours. While there's certainly no crystal ball to reveal anything with certainty, there are market trends and signals that offer insight about what the next couple of decades could have in store for professionals in the cattle business. Our final speaker for this year's Feeding Quality Forum joins us to share some of the long-term outlook we may be able to expect for the next couple decades in the beef industry. Randy Blach joined the CattleFax team in 1981 and has served as the CEO of the organization for nearly 20 years. With a history steeped in family ranching in Colorado, Randy has dedicated his career to helping cattle producers sustain their business through profitable marketing and management decisions. Randy, we'll turn things over to you.
Thank you, Kara. It's great to be with you all today. It's really a pleasure to have a chance to spend a little bit of time talking about where we think the industry is headed. There we go. It's a pleasure to have an opportunity to spend a little bit of time with you, thinking about where the industry is headed, how we see things moving as we go down the road. In order to do that, I think we really have to have an appreciation for where we've come from. It's not been a straight line. And you think about all the great information that Paul shared with us. Paul, I thought you did a wonderful job going through a lot of data and information there, but it certainly hasn't been a straight line. There were some very, very difficult times that this industry went through from the late 1970s through the late 1990s, early part of the 2000s. I think in order to appreciate where we're headed as an industry, we need to understand some of the mistakes that we made thinking back over time. So that's what I'd like to spend a few minutes with you today going through. I think if we start out in here and we think about where our cattle numbers have been, and I just share this with you for those of you maybe a little newer to the industry. You go back into the mid-1970s. We had 132 million head of cattle in our inventory in 1975. And you can see that decline that we went through decade after decade after decade. The decade of the 80s was an absolute train wreck. We were going through not only in the cattle industry, but in all of agriculture. For those of you that don't have as much history back then, I'll just remind you, in the decade of the 80s alone, we lost 12% of U.S. agriculture producers. Well, the beef industry wasn't spared, as you can see on this chart, and the numbers continued to slip and slide lower until we got into the earlier part of the previous decade in here, and we started into our expansion back in here in 2013-14. The thing I would say to each and every one of you when you look at this screen is note how we've taken out the long-term downtrend in numbers. So we were in a cyclical business. Basically every 10 to 11 years we were going through a cycle. We've just taken out the long-term downtrend in numbers. And again, I believe the reason we've done that is because we're an industry that is now focused on doing the right thing, producing the highest quality product that we can, and meeting the changing demands of our consumers. If you look at where the feeding industry is in total, I think this is something that all of us need to set back and chew on a little bit. If you take these numbers in here and you look at the states of Nebraska, Kansas, Oklahoma, the Texas Panhandle, Northeast Colorado, in that region, we have 75 to 80% of the nation's fed cattle supply that's basically into that 5-state area. And you can see that we basically are sitting on top of the Ogallala Aquifer. Well, that water resource is why our feeding industry has been so robust within that region. There's a lot of advantages in that region of the country, but the key one has been access to adequate supplies of water, not only to feed the livestock, but to grow more of the crops. So this is something that I think is critical as we look at our industry, that if we want to have an industry that can continue to grow and prosper, we have to have water resource that can serve those needs. So that's something I challenge everybody on with this today to be thinking about. How are you going to do your part? I know a lot of you have been doing your part for years and years and years, but this is something that collectively that we all will have to continue to do as we look down the road. Now, we've seen a lot of productivity gains, haven't we? We go back over time, and the way I've always looked at it, when we look at the nation's beef cow herd, about 75% of the decline in cow numbers that we've experienced over time have been offset with increasing weights. And what I mean by that is increasing carcass weights. Weights have increased at the rate of about 5 pounds a year now. When we go back, as you can see on this chart, that's been going on since the late 70s, early 80s. And again, as we become more and more focused on high quality genetics, feeding cattle to a natural endpoint in here where we can generate more of the high quality product that consumers desire, we've seen these weights continue to increase. And quite frankly, we think they'll continue to increase. They may not increase at the same pace that they have historically, but I do see further growth down the road. And the reason for that is we continue to have opportunity to bring up the lower end of the cattle. So just bringing up the lower end of the cattle within our production mix out here today will allow these trends to continue to express themselves. Now, I think this is really a good mindset for each and every one of us. Look at the change in beef cow numbers that we've gone through since the peak back in here in the mid 70s. Again, the numbers have declined from that time period back in there. You can see where we are in here today. The beef cow numbers were up in here at about 45 million head. More recently, we've been up in here to 31 to 32 million head. And again, the cow herd is now contracting some. We've seen numbers decline in the last year. They'll be down a little more this year. We think with the dry conditions that we're experiencing, the cow herd will drop even further going into 2021. So we've gone through a 2 to 3 year contraction of the nation's beef cow herd. And a lot of that just goes back, there's just not enough profitability out there today with the increase in cost and some of these drought situations we're going through. Obviously, we're making a little bit of money, but we're not making enough money in here across the industry in total. So I think you look at this, I think it pretty well tells the story. The production increases or the productivity increases have been pretty pronounced that we've seen over a long period of time. We think that will continue. This has been one of the main focal points in the industry. And I take this back with you when you look at the chart in here and you start over here on the left-hand side. The year 2000, for those of you that are keeping score, this was the largest fed cattle slaughter in the history of our industry. 30.2 million head was the peak fed slaughter that we've seen all the way through here. Even though we had substantially more numbers back in the 80s than what we have now, we didn't have more fed cattle slaughter. We had more non-fed slaughter. Cattle stayed out on grass longer. Again, we had more outside cattle that worked through the system. But this is what we've experienced over time. We went from 30 million fed cattle slaughter in 2000 to a decline to 23 million head in 2015, a 7 million head reduction in slaughter. Well, think about what that means. If we got 7 million fewer cattle to harvest, that means we're going to have some packing plants that close up, don't we? And that's what we're dealing with today. As a result of this, our slaughter capacity on a weekly basis has declined about 70,000 head a week from where it was back in here in the 2000 to 2005 time period. So as our numbers have bounced back in here, we've not grown our fed cattle supply. Now we haven't grown our packing capacity, I should say. Our fed cattle supply has bounced back, but our packing capacity is not. We've increased it slightly, but as I'll show you here in just a few minutes, we haven't increased it very much. So this is really where the bottleneck is in the industry. This is our peak in fed slaughter. What we'll see in here, 2021 will pretty well mirror what we expect, what we saw in 2019. As we all know, the April-May harvest levels were sharply reduced because of COVID-19, and that's why you see that spike down in here in the current year. So this gives you a pretty good feel of what I was referring to relative to the data. Go back to 2005. Our 40-hour week harvest capacity, the way we estimated on a 40-hour week, so 5 days a week, we could harvest 568,000 head of fed cattle in 2005. Look how this declined. Our low in harvest capacity was in 2016 at 465,000. So we actually went through 100,000 head a week decline in harvest capacity as we came through. Now we've increased a little bit. We've gone from 465,000 to 490,000. But for those of you that are cow-calf producers, stocker operators, that maybe don't see this on a daily basis, like so many of the feed yards that have had to deal with this, with the backlog that was created in here, with the stunted slaughter that we had in April and May, this will really help you understand. When the red line, which is the actual weekly slaughter, moved above the blue bars, which is our 40-hour week, obviously what that told you is that the industry needed harvest capacity more than ever. So we've incentivized the packers, if you will. They've had to be incentivized to run these plants at aggressive paces, not only Monday through Friday, but through Saturdays. And you can see how many more cattle they've had to harvest than what we've had capacity in here over the last 2 to 3 years. So this is the bottleneck in our industry today, is we just don't have enough harvest capacity. Quite frankly, I just tell you, in my opinion, we won't grow the nation's cow herd until we really are able to increase our harvest capacity some to alleviate some of this bottleneck. And you'll see that when I talk about margins a little more in a few minutes. This is what our production numbers look like. If you look back since 1980, we were producing about 21.5 billion pounds of beef in 1980. You can see where we are right now. We're at record production levels. We're up in here producing about 27 to 27.5 billion pounds of beef. Again, a lot of this has been as a result of the increase in carcass weights, increase in productivity, weaning a higher percent live calf crop, a number of the things that Paul talked about, more red meat yield on these animals. This is what we see as we go through over time. So it's not as straight a line as you see in pork and poultry as we go through some of the scenarios we do. You can see the impact of the drought that we had from 2008 to 2012, and then obviously the expansion in 13 and 14 that took us to our low in production through that time period. And then we snap back very quickly. So we think our production levels are going to flatten out in here. We pretty well have peaked in here. They'll flatten out in here for the next few years, probably contract a little bit as we go through the middle of 2023 to 2025. When we stop in here, and I want you to think about what's gone on. When we went through this situation back in here in the 1980s, the reason that these production levels were increasing the way they were, the 1986 situation was the dairy termination program. For those of you that are young enough that you've never heard that term, we had to absorb an additional couple million head of dairy cows that were harvested in that particular year, and that added substantially to our harvest and production levels and actually made our low in the cattle cycle. 85, 86 was the low in the cattle cycle in prices in that particular decade. But what I want you to see as you think about this is the big war on fat that we're fighting back in that time period. Again, there was an attitude about red meat in the industry. We all know that. There was a lot of false information put out there, but quite frankly, the industry in that time period was not armed. We didn't have the checkoff programs where we could do a lot of the research that we could fight back. Again, we were basically taking a double barrel on a daily basis and no way to fight back because we didn't have the facts. Well, the situation that we've got today with the checkoff programs and the way we've been able to continue the research, the product research that's moved along with that, again, things like the quality audits, those have been critical benchmarks for the industry to know where we are we making good decisions as we look down the road? Is the consumer changing, and are we reacting to those changes in a positive fashion? So this is what we were doing. Now, I can take you back in here to the early 1980s, late 1970s. I was on the judging team at Colorado State University, and I'll never forget this. And there are a lot of you on the call here today will remember this just as I do. When we were giving reasons in the reason room then, we weren't talking anything about quality. We weren't talking about muscle. We were talking about long, tall, lean. That was what our jabber was about when we'd go into the reasons room. We were talking about long, tall, lean, 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 lean. Again, no quality in here. And that was a time period when the continental breeds dominated the scene. And again, that was the situation in there on the left is pretty much what we were seeing in there in those days. You look over here onto your right-hand screen, this is where we are today. The focus is on quality, isn't it? We're talking about red meat machines, cattle that have a lot of meat in them, cattle that have a big thick top on them, a big thick butt on them, some chest in them, some rib in them. Cattle have got a tremendous amount of quality grade. More choice, more upper 2/3 choice and prime, and obviously the consumers have responded greatly to that situation. So this is what we've transitioned, what we've looked like over the last 30 to 40 years is a transition into this high quality animal. Well, for those of you think about this on the left, this is 1990 up in here. Remember, the low in beef demand was basically 1998 to 2000. This was the low water mark in beef demand. So when you look at this chart right in here, this was where demand bottomed, was right there. Look what percentage of our product was selector or lower. Again, we were approaching 40%. And if you go back to the quality audits at that time period, 1 out of 4 steaks was a disappointment. Well, it's no wonder that consumers were walking away from our product. They didn't like it. It didn't taste that great. And 1 out of 4 of them, if they went to a restaurant to have a good steak, 1 out of 4 of them was not a pleasurable eating experience. When we got this message as an industry, and we started to focus, look how this trend has changed here over time. And it's really accelerated in here over the last decade. At the same time, on the right-hand screen, look at the black-hided steer heifer slaughter. And again, we'll look at some of the other trends with the quality that's moved along with that. From the mid-90s, 35% of the cattle being black-hided steer heifer slaughter to a number that's up in here the last several years between 65 and 70%. So again, that's where it all started. As Paul said, initially producers had to make a decision, and they made a decision initially with black hide. The second thing was genetics, putting more high quality genetics in these animals where we had a higher predictability of what they would produce. And we started to focus on grids, formula marking, etc., to where we had an opportunity in here that we could get paid for more of the quality attributes that we were putting into those cattle. Now, this I think is maybe the most important thing for everybody to understand and appreciate where we've come from. This takes us back to the demand curve, the retail demand curve that we've been on for the last 40 years. And I know a lot of you have heard me say over time that, hey, beef demand was cut in half from 1980 to the low in demand in 1997, 1998. Well, this is the actual data. You can see it was actually cut a little more than half. We went from the base in here of 100 in 1980 to 47 by the time we got to 1998. I mean, that was an absolute train wreck for our industry. We were losing producers right and left. Again, nobody was making any money. Again, we weren't getting rewarded for the products that we were producing because, quite frankly, we weren't doing a very good job of producing product. We were just putting out there what we all wanted to put out. We weren't accountable. We weren't listening to our consumer. This is where the industry really started to change its focus. We really started to focus on quality, and it really became much more noticeable by the time we got in here 2002, 2003, 2004. Well, look at this change that we've seen in here from the demand low, from 47 up to 61. What I would say to you there is right here. This is what's important for you to understand. That demand growth that we experienced as an industry from this demand low right here has been worth, you could argue it's been worth anywhere from $225 to about $280 a head, depending on the way you want to calculate that. Again, a good midpoint on that is about a $240 a head increase in demand from the demand low in 1998. So this quality move that we've had, consumers have voted with their pocketbook and said, we want more of the good stuff. And they've been willing to pay for that. So is that going to change going forward? I agree 100% with Paul. We need to stick with what we're doing, do more of it. And some of these other value attributes that Paul talked about, they're just going to build right on top of this quality movement that we've seen within the industry. Now, let me show you what happens to an industry when we don't respond to the consumer. This is the demand situation that we got into. This is when demand was really starting to fall out of bed. So right in this time period, 1980, so from the late 70s to the early 80s, look at the demand low that would have occurred in here in the late 90s, early 2000s. We lost 400,000 producers. 400,000 producers left our industry. That tells you it's not a sustainable industry, doesn't it? It just absolutely is not a sustainable industry when you have those kind of things going on. So I think when you step back and you look at it, yeah, we lost several producers by the time we got into 2012. Most of those we lost from 2008 to 2012 just because of the magnitude of the drought. But look how things have stabilized. In the last census data, we've seen tremendous stability in here in this data. We think it's going to continue to stabilize if we can drive more profitability, obviously, back in here to the cow-calf sector. And again, there's opportunities. I've got some remedies for that we'll talk about here in just a few minutes as we get a little bit further through my presentation. So this is the reality of what's gone on within the course of the industry. We basically have taken an industry that was producing 50 to 55% of our product was choice or prime to where we now are producing at 82% is choice and prime is what we'll estimate our numbers will be this year. If you look at the increase in production in here, that's about a 62 to 63% increase in production that we've seen of choice and prime product on an annual basis. So we've really focused on producing the good stuff. Now I can take you back here 3 and 4 and 5 years ago. What was the discussion in the industry? Oh no, we're going to produce too much choice and prime CAB and we're not going to generate any premiums. Not the case, is it? We've seen these premiums stay strong all the way through here because more and more consumers, once they taste the good stuff, they want to stay with it, don't they? So this has been a quality movement. Now the opportunity is to layer some of those other attributes onto this to move the value equation forward as we move forward into this next decade. This gives you a pretty good snapshot of where we are in here with from an industry standpoint. Choice and prime, again, you can see the numbers in here, how much it's moved up, the upper 2/3 in choice, the change, the percent change, we've moved up 93% with upper 2/3 choice and prime from 2005 to the final numbers in 2019. So that's a substantial move. And from an annual harvest standpoint, we've seen annual harvest numbers increase over 6 million head on choice and prime from 2005 to 2019. Upper 2/3 choice and prime have increased 4 million head. So the industry is really focused in here, doing the right thing and meeting the consumer demands. Look how we get paid for that. Choice demand is up 60%, a minimum of 60% from the demand lows in 1998. Look at select demand on the bottom over here. It's actually down, isn't it? Our demand, even though choice has gone up over 60%, select demand is actually down compared to where it was in 1998. So I think that speaks pretty loudly in here what the consumers want, what they're continuing to demand. From an expenditure standpoint, we've seen a tremendous increase in expenditures. Beef spending has increased 97%. Beef has actually gained between 6 and 7% market share of spending compared to pork and poultry. So if we look at that whole consumer pie out here of spending for beef, pork, and poultry, they're spending 6 to 7% more on beef as a percentage of that overall pie than what they were back in here in 2000. So I think that speaks volumes for focusing in here and delivering a high quality product to the consumers day in and day out. The markets are going through a major shift in here. We've moved from a supply driven market. Again, Kara made the comment that I started with CattleFax back in here in 1980, 81. These markets were totally supply driven back then. You go through them, that was the boom and bust cattle cycles is what we'd go through. Demand was something we'd talk about, but nobody really knew how to measure it very well at that time period. We didn't have the same tools. We don't have all the data that we have today to be able to measure it at so many different endpoints. So we were strictly a supply driven market. We would overshoot the supply target, markets would break hard, supplies would drop sharply. There wasn't be enough of it out there. Prices would go straight up, and we'd do that old boom and bust thing that honestly didn't serve anybody very well as we came through that time period in the late 70s through the 80s and 90s. Well, look at the change that we've gone through. I think maybe this is one of the key charts in here that I would challenge you with to do some thinking about. Think about where we've been as an industry. And if you come over here and you look at this particular chart, look at our average profitability. Now this is profitability. Again, this assumes no risk management. For those of you risk managers, again, we don't have a way that we can roll these into these baselines. This is just cash to cash profitability. And we have to look at averages, but it takes into account cow, calf, stocker, fed cattle profitability, and packer profitability. From 1980 to 1998, our average profitability is $32 a head. 4 industry segments had to split up $32 a head. Is it any wonder that we lost 400,000 producers in that kind of a scenario? Is it any wonder that we lost millions of head of cattle as we came through there? And obviously, we had a consolidating industry from a feedlot standpoint. We had a tremendously consolidating packing industry as well. Look what that number has looked like over the last 20 years. $249 a head average profit compared to 32. Now you look over here, and again, when you think about my comments that I made earlier about where our bottleneck is in the industry, our bottleneck's obviously in harvest capacity. You can see the size of the yellow bar in here. Again, the yellow bar meaning packer margins, they've been record large in here. As we all know, 2017, 18, 19, and 20 will be no different. They're generating a higher percentage of the overall margin in the industry, but there's a key takeaway point there. Understand that margin is in the industry. We don't have to go build demand. It is already there. So as we balance supply and demand out here, as we increase harvest capacity or we decrease the number of animals that are moving through the system, this will be a situation, this will ebb and flow, and it'll start to balance back out in here over the course of the next several years. Obviously, we need some additional harvest capacity. Hopefully, we'll find some solutions for that in here in the not too distant future. But I think this is a pretty powerful story. Again, there's a lot more money in our industry today in the last 20 years than there was the previous 20 years from 1980 to 1998. And that is mainly been driven by demand. Again, that demand, I think we can point the finger right back to profitability that we're seeing in the industry that has been the main driver of that because of the quality focus that we've had. Now go back and look at this particular chart from a timing standpoint. Obviously, this is a big discussion point in our industry, negotiated cash versus alternative marketings. We've seen a lot more cattle sell on grids and formulas. The negotiated cash market's down where it's 20% of our total. But this is an issue in here in our industry is how do we balance this out? Because we need to make sure we're sending signals to producers and they're accountable to produce more of the good stuff and produce what the consumers are willing to pay for. Again, the differentiated market, I think, that has driven the lion's share of the demand growth we've experienced in the industry. So today, if we look at all these different premiums and programs we've got, again, quality has been the main driver. The green items in here are already attributes that we're getting focused on, we're getting paid for today. As you look at the top part of this graph, I think these are going to lay over the top of some of these other quality things that we've seen develop over time. And again, those will be differentiators that will add some additional value for consumers that really, these are important attributes to them. All of these should be important to each and every one of us. Again, from a export standpoint, more and more of our competition in the global market wants or is providing traceable product, source verified product. I think those things are going to be very important. And obviously, we all know sustainability is a key thing as we look at our industry in the future. This shows you one of the things relative to our video auction premiums. And again, this just goes back over the last handful of years since 2015, but you can see the market's been willing to pay a quality premium or a premium for these different attributes. And Paul showed that, broke that down nicely in a table. Again, we don't think this is going to change. This is just looking at the video auctions in 2020. Again, this is looking at what we've been willing to pay for unweaned cattle, commodity cattle, and program cattle all rolled together. Look at the value difference. This is the value difference that we've seen in here on the video sales in May through the first half of August. Again, this is real money, isn't it? That doesn't take into account the quality grade premiums that we could generate on the grids as those cattle are harvested coming through the nation's packing plants. So again, when we look at all of these things, today we're in a situation that about 86% of our total beef product is consumed in the United States. But as we look to the future, obviously a whole chunk of the world's population lives outside of the United States, as you can see on this particular chart. So we're going to be in a situation that we do have to become more globally focused if we're going to continue to increase our business down the road. The global population is increasing at the rate of about 83 million people a year. Exports today are adding about $350 a head value in here. We think that number is going to change and increase substantially by the time we move through the balance of the current decade that we're in. So this is what the markets look like from a production standpoint. The U.S. is the #1 beef producer, the #1 poultry producer, and the #3 pork producer on the planet. Now, the first thing you'll note in here, who really knows how big the China herd is today, but this is overstated, or 2020 with the African swine fever we're going through in China. Obviously, it's had a devastating impact on Chinese pork production, but this number is probably overstated, but it gives you a pretty good feel of where we are across the industry. We are a major supplier of beef, pork, and poultry to the global marketplace. And as we look down the road, when you look at beef, a lot of folks think, well, Brazil's the #1 producer. Not the case. The U.S. has been the #1 beef producer. And again, the reason we're the #1 beef producer is because the lion's share of our product is a high quality fed beef product, so we have more yield per animal. Look at these production increases that we've experienced over time. Again, if we go back to 1990, we were exporting a very small percentage of our overall production. Contrast that to today, with where we are today in 2020, the U.S. will export about 18% of its total beef, pork, and poultry production, worth about $19 billion. And as you see going forward, this growth over time has been at about 2.1% on an annual basis. We think it will continue at that type of pace, maybe even a little more, depending on what happens with the Chinese situation. That could actually accelerate more as we look down the road. Well, this is our production numbers in here. When we look at these things, again, this is what we would look at by 2040, that what kind of production numbers we could experience. Today, we're at 100 billion pounds of beef, pork, and poultry production. If we assume trendline growth, this would suggest we would have an industry that's producing closer to 150 billion pounds of product by the time we get to 2040. So wrap your head around that. Think about the infrastructure, think about our production, think about all the things that would be required to increase harvest capacity, feeding capacity, et cetera, as we look down the road if we were to maintain the trends that we've been in since 1990. This is what the export numbers would look like. These export numbers today, we've been growing the beef, pork, and poultry export numbers at a fairly rapid pace. Just less than 5% has been the long-term growth trend. Our exports in 2020 is already indicated are on top of 18 billion pounds by 2030. Those numbers would be close to 28 billion pounds and 23% of our total production. So again, this gets quite exciting in here, but I challenge you, if we're going to do that, how many of those things on those previous pages I showed you of attributes are we going to have to be able to check the box on as an industry? Are we prepared to do that? Are we prepared to have traceable product? Are we prepared to be source verified? Are we prepared to continue to make the strides, some of the same hard decisions we made 15 and 20 years ago focused on quality? Are we going to be willing to do that as we move forward to where we can increase our global market share and presence? Again, I mentioned the boom and bust cattle cycle that we had. This peak in here as we go through, this was the drought scenario we went through. Our cow numbers would have never dropped below 31 to 32 million head. We wouldn't have had this V bottom in here had it not been for the drought situation we've gone through. Well, we're going through a little bit of a drought situation in the West and the Central Plains today. But again, this is not necessarily a forecast, but I want you to think about if we didn't have outside factors like drought and we just assumed a long-term growth trend that we've been experiencing, that's about where the nation's beef cow herd would be as we go down the road. And again, with commercial beef production, our long-term growth trend's been about 0.7% a year. If you apply that in here, once we get through the current liquidation or contraction phase, look where that would put us. We'd be producing up in here 28 billion pounds by 2030 and basically 30 billion pounds of product by 2040. So again, that's what the numbers would look like. I mentioned earlier that we'd have a situation that we'd have beef exports that would be, instead of worth $350 a head in value, we would see beef exports worth closer to $500 a head in value by the time we finish this decade. So some tremendous opportunities out here as we look at the industry, if we're willing to make the step and do some of these other things that we discussed. Again, the cow-calf producer needs to be more profitable. The good thing is the profitability is in our industry, but we need a little more harvest capacity to balance who's getting what share of that in here today. Again, that'll sort itself out in here over the next few years. Numbers are going to contract a little bit. We've already seen that there's going to be some additional packing capacity coming online in the next 12 to 24 months. So these would be a few of the take-home points that I would leave you with today. The U.S. produces 75 to 80% of all the grain-fed beef on the planet. I'm talking about high-quality grain-fed beef, not animals that have just been fed a little bit of corn for 60 or 90 days. I'm talking about high-quality grain-fed beef production. And the taste and quality, in our opinion, that is the number one for consumers. That's why we've seen the growth in demand. That's why we've seen the growth in spending. That's why the beef industry has gained 6 to 7% market share against pork and poultry from a spending standpoint here in the last 20 years. We can't play the commodity game. We have to continue to focus on these high quality products and we'll win. Some of these other attributes that we've talked about, traceability, source verified, animal care, food safety, sustainability, all these are part of that value equation. And again, I like to look at the value equation in this manner. Value equals benefits divided by cost. I'll say that again. Value equals the benefits divided by cost. And again, I think a lot of you have found that value equation has been very, very successful for you as you focused on quality. I think some of these other attributes, it'll be the same as we go down the road. So we have to continue to listen to our consumer. These are things that I think we have to think about as an industry as I close with you today. If we go back to selling all these cattle on averages, do we lose the accountability and incentive to produce what the consumers really want and desire? Again, that's a hard question in our industry. Price discovery, value discovery, all of these things. This is why this is a difficult thing, but I think we will come up with a solution for that to where, again, we have adequate price discovery on a weekly basis where we can move the industry forward. The export market differentiation, obviously that's coming. It's already there today, but it's coming. It's going to become even more important to us over the next 10 to 20 years as a higher percentage of our quantity and value is exported. We think there's going to be more cost plus pricing niches develop in the industry. I think that will be opportunities for many of the producers out here, maybe even more of the niche packers. That will be where we'll see some additional packing capacity come into our industry, maybe more plants that would look like 1,500 to 2,500 a day, plants that would come in that can respond to some of these opportunities. And again, we think there will be more outside capital, U.S. and foreign capital come in and invest in the U.S. industries because we do have the highest quality product on the planet. We've got the safest quality on the planet. And again, I think we've got a proven track record of being able to trade and have everything in place to be able to be a reliable supplier as we look down the road. So we're excited. We think we've got a very bright future as we look at the history of the beef industry, the U.S. protein industry. And again, I look forward to some of your questions. It's been a pleasure to be with you.
All right, thanks, Randy. We do have a handful of questions that have come in. I'll start with your slide in reference to global protein production. Where do you see Russia in terms of beef production in the future? Will it increase dramatically with the import of live cattle like we've seen in the past several years?
You know, I would guess that Russia will see an increase in here with the importation that they've had of more production coming in. But I think they'll still be, if you go back through and can we slip back in here to the graphs? We'll pull up a graph in here. Can we do that, Kara?
If you'd like to, we can.
Okay. So I need to go back here to, okay. So I think this will give you a pretty good perspective. This is the largest beef producers that we have out here today. Do you see Russia on that list? Again, Russia will increase, but I think to be what I would call a major player from a global beef production standpoint, no, I don't think that they will be a major player, but they will see increased production within that region.
In reference to your industry profitability chart, how long do you believe the feeding sector can survive the equity erosion it's experienced over the past 15 years?
Well, I think if you go back to this particular data, I think that's a great question, and I think we need to have a pretty honest discussion around this. I think the honest discussion we need to have is, remember, this does not include any risk management. And as an industry over the course of the last 15 to 20 years, with the increased volatility, the swings, these black swan events tend to occur on a more often basis. Again, it seems like they're coming at us every few years now. I just think that's got to be part of our daily appetite. We have to do a better job of managing risk. You know, we've had erosion. You look at the fed cattle bars in here, but the lion's share of the cattle that you see that lost money on these bars, the lion's share of the cattle we had an opportunity to lock in a profit on. So I would challenge our producers out here. That's part of being sustainable. We've got to help ourselves. We've got to be willing to take more of these singles and doubles instead of always shooting for a home run. And I think that will help us be much more sustainable as a feeding industry as we look down the road.
Now, you haven't talked much as we talk about, you know, consumer demand going down the road. We haven't talked about plant-based proteins. Do you see those developing products impacting overall beef demand moving forward?
Well, I think plant-based proteins, I think we are going to see a continued increase in plant-based proteins, the other proteins coming into the marketplace. And I would look at that as, I think the meat industries in the U.S. will lose some market share over the next 10 years. I think it'll be, in my opinion, I think it'll be a relatively small percentage of the market share that we'll experience. But I think if you look at the population increases that we're going to experience, if we continue at this pace of population increasing close to 80 million people a year, again, it's going to be difficult to ramp up our meat production fast enough in some of these regions to be able to feed all these folks. So I would actually say that there may be some opportunities in some regions of the country that there is a place for that, more of the plant-based products to help feed those people. But today, again, it's a relatively small percentage. Again, it's less than 1 pound per capita consumption of plant-based proteins in the U.S. today. Compare that to 220 pounds of consumption on a per person basis of red meat and poultry in the U.S. today. So yes, I think we'll lose a little, but I don't think it's going to be substantial.
We've got time to answer one last question live. So this will be the last one we take time for on the screen. Do you see the feeding and packing industry becoming more dispersed throughout the country due to water restraints or other factors moving forward long term?
Well, there's an opportunity, I think, in some regions of the country that we could see some additional feeding or packing capacity. But again, I think if you look at where the feeding industry is today, if we just go back and we focus on this chart I shared with you all earlier, why is it here? Again, water, feed, think about the regions. Not very much population encroachment through most of those areas. And again, you've got a pretty arid climate in most of these regions where it's conducive to being able to feed cattle efficiently, a high quality diet on a daily basis. So there's a big reason that we've got the cattle feeding industry where it is today. And again, we've got the feed resources. But if we don't manage the water resource and we lose some of those feed resources in that region, then I do think we'll see some additional shifting. Again, over the last 15 years, we have seen some shifting into the Midwest, more into Nebraska, South Dakota, Iowa. That's not been as obvious in here over the last 5 years as we came through the drought situation in 2014 and the lower numbers. But again, over the longer term, there has been some shift. Do I think we're going to feed a lot more cattle in the Southeast region? No, I don't think we've got the right environment to feed cattle in an efficient manner there in a larger way. But we certainly could see some regional facilities develop in some of these other regions. I think that's very possible.
Very good. Well, Randy, we sure appreciate the insight you had to share with us today. Always love hearing the perspective you share, especially as we try to take a look down the road and where this industry could end up. So thank you very much. We appreciate your time.
It's great to be with you. Really, really appreciate it. Best of everything to everybody out there.